I'm your mentor, Mari, and this is Forex 101. This lesson will detail another trend direction indicator called the Parabolic SAR. The Parabolic SAR, aka the Parabolic Stop and Reverse, helps us identify trends and market reversals. It can also provide entry and exit signals within the market for investors. Let's turn our attention to a live chart where we'll dig a little deeper into the functionality of this indicator. All right, you guys, so we are here on the daily chart for USD JPY, and I'm going to be showing you guys literally one of the simplest indicators that you could possibly use. So this is probably going to be a fairly short training just because for this indicator, there's really not much I can tell you about it because it's pretty black and white. So let's go ahead and jump into this Parabolic SAR. So the first thing I want to point out to you guys is that the SAR in Parabolic SAR actually stands for stop and reverse. Right? So just based off of the name of this indicator, you can already assume its method of application. So let's go ahead, scroll up here to indicators, and I'm going to type in Parabolic SAR. I'm going to click this one right here just once. And here we are, you guys. We do have the Parabolic SAR now represented here on our screen. I'm going to go ahead and just change the visual appearance of it just so we can see it a little bit better here on our chart. So I'm going to go here to the SAR settings, and I'm just going to make my SARs white. And I'm also going to make them bigger. Now you have the option to keep the crosses here, like the little stars, to represent your Parabolic SAR. But me personally, I like to use the circles. I don't know why, it just looks cleaner to me. That's just what I like. So that is all your preference, you guys. I'm just gonna go ahead and save that. So I just told you guys that the SAR in Parabolic SAR actually stands for stop and reverse, right? So what this indicator essentially does is tells us when the movement of price direction is stopping and reversing to the other direction. And let me just zoom in so I can show you guys exactly what I mean. Okay, so if we look right here, you guys, we see that we have our Parabolic SARs at the bottom. Now, when you have your Parabolic SARs at the bottom, so you guys, when we have our Parabolic SARs at the bottom of our candles, this is actually a representation of a buy signal within the market, right? If the Parabolic SARs are at the bottom of these candles, I can only assume that the market is uptrending. So as you guys can see, we had our Parabolic SARs at the bottom. The market was trending up, but then what happened? Boom. The indicator stopped and reversed to the other side. So you guys, this was our first indication once our Parabolic SAR flipped that now the market was actually going to start to move in the downward direction. So when you have your Parabolic SARs at the top, when you have your Parabolic SARs at the top, that is going to be an indication for us to sell, all right? SARs at the bottom, buy signal, SARs at the top, sell signal. So this indicator is going to work best when you are trading with the trend and when you are looking for reversals in the market. So this indicator obviously tells us when price is reversing, right? Since this indicator literally tells us when price is stopping and reversing to the other direction, it would be best used with oversold, overbought indicators that also signal reversals within the market. So if you use this in conjunction with one of those overbought, oversold indicators, you should be able to get some pretty accurate entries and exits. Now, besides that, this can also be an amazing continuation indicator, you guys, allowing us to get in on continuations within the market. And the best way to use this indicator in order to hop into continuations on ongoing trends is to first identify the overall trend. So if we are just paying attention to this one example currently here on the screen, let me just remove these words. And I'm also going to just hide the parabolic SAR for a second. So if we are taking a look at the overall trend of USD JPY during this time, we can actually see that this market is uptrending. And let me just go ahead and draw this uptrend for you guys from here to here, okay? We currently have the market uptrending. So since we know that this market is currently uptrending, we would only want to enter trades where our parabolic SAR sits at the bottom of the candles, right? Because we just said that the parabolic SARs at the bottom represent a buy and the parabolic SARs at the top represent a sell. So I'm going to go ahead and just reveal our parabolic SAR indicator. And let's just take a look at the amazing continuation that we would have been able to get into just using this one indicator. So once we saw that price was actually trending up, our first indication that we could have possibly entered in on the continuation of this move was when our parabolic SAR stopped and reversed to the other side. So once we got our parabolic SAR to flip to the other side, all we would have been doing is waiting for another flip. So we had price uptrending, uptrending, uptrending. Then we had our parabolic SAR flip, right? It stopped and reversed because the market had a small pullback. It was downtrending literally just for a couple of days there. And we were patient and we were waiting for our parabolic SAR to flip again. So once we got this next flip, you guys, along with this flat bottom candle, along with the fact that price was already respecting this trend line, these are all great indications letting me know that I can go ahead and get into the continuation of this move up. So we wrote this continuation up, up, up. Then we had our SARs flip. Once the SARs flipped, we decided to take profit because we just didn't want to deal with this drawdown, right? So once our SARs flip, you guys, that can also be an indication for you to get out of a trade, okay? If you are just purely trading the naked chart and just using simple tools like a trend line and the parabolic SAR, you can definitely use the parabolic SAR as an entry and an exit indicator, all right? You might lose a few pips waiting on the SAR to flip, but I guarantee you're not gonna lose as many pips as you would with another indicator like the MACD, like using the MACD to exit trades, okay? You're gonna still secure way more profit by just waiting for the SARs to flip and then taking your profit. So let's get back into this example, you guys. So we rode this continuation move up. We had our parabolic SAR stop and reverse to the other side, letting us know that now we had more seller's momentum in the market. So essentially what we would have been waiting for was another flip of the SAR. So you guys, we did get another flip of the SAR right here. But again, this would have been a bad entry because although we had all these other great confirmations, price still respecting the trend line, the parabolic SAR flip, a flat bottom candle. You guys, look at the size of this flat bottom candle. Let's just zoom in and look at this one candle where the SAR flip. We got a parabolic SAR flip and we got a flat bottom candle, but the body of this candle is weak. It's small. It's minuscule. Like, this tells me that buyers don't have that much momentum in the market. So although all my other confirmations are lining up, just the size of this candle would have been a huge turnoff for me. And what I probably would have done was waited for the next candle to see if it produced a bigger body candle. But as we can see, the next candle was actually a doji, and then another doji, and then we had the SAR stop and reverse again to confirm that price was actually truly moving down this time. So once we had price moving down, we know that we are in an overall uptrend. We know that the next thing we're looking for is just for this SAR to stop and reverse again to give us another entry on this uptrend. So we had price come down, right? We had this pullback. It tested this trend line area. It could not break this trend line area. It respected it. We had our parabolic SAR stop and reverse to the bottom. That was our second indication for a buy. Then we have a big body, you guys, not a little body, a big body flat bottom candle. So now, you guys, this would have been a great indication for me personally to go ahead and enter this trade. And I would have rolled this up until our parabolic SAR flipped again. So I know you guys can see that after this parabolic SAR flipped, we had it flip again, but this was like a pretty weak move in the market, if I'm being quite frank. So you guys, this is why it's important not to just rely on indicators alone, for one, and not to just rely on one indicator alone. Like I said, the parabolic SAR would be best used with another indicator like the RSI or the stochastic oscillator. And by you using those together, you will be able to produce more accurate entry and exit signals. So now that we talked about this uptrend, let's go ahead and look at an example of a downtrend. All right, you guys, so here we have an example of a downtrend still on the daily time frame for USD JPY. Let me just go ahead and draw this downtrend for you. Let's start it here to here. All right, you guys, so we do have our downtrending market going on. So now that I have drawn our trend line going down, I'm just going to go ahead and reveal our parabolic SAR. So again, you guys, same as with the buy, since we know that the market is downtrending, we want to look for entries when the parabolic SAR is at the top of the candles. So we were able to identify this downtrending market. We had the parabolic SARs at the top. Then we got exactly what we needed. We got a stop and reverse to the other side. And we knew that we were just waiting, literally just waiting on the parabolic SARs to flip again and give us a good entry signal. So we did have our parabolic SAR flip. Now on this first candle where it flipped, you can see that there were wicks on both sides. So I most definitely would not have gotten into this trade, at least not at this time. Then on the next parabolic SAR, the next candle, you guys, we did get a bigger body candle and it was a flat top, but you do have to understand and take into account where price is in the market. So if we take a look here in the past, because I'm going to show you guys how you would have been able to avoid this little drawback right here, right? We can see that in the past, price actually continued to respect the same area within the market. Let me just show you guys. So this area right here, all right, this area right here, you can see that price came down, but then it bounced back up. It came down, but then it bounced back up. And here when we got our SARs to flip, it was doing the same thing. So even though the SAR flipped, right, we had price respecting the trend line, we had a big body flat top candle. Look at how this big body flat top candle reacted to this area. It pulled all the way down here, but then it pulled all the way back up. You guys, that is a red flag. All right, that is a red flag. Okay, if you see that price keeps coming to a certain area, but it's not breaking past it, you have to be very cautious and wait. Literally wait, you guys, for price to break this area before you enter the trade. So if I go ahead and extend this out, you guys, look at that level, okay? That is beautiful. Do you guys see how it turned from the floor to the ceiling? Do you guys see that? We had price coming down and testing this support level as a floor. Then it broke through support, created a new resistance, and started testing this level as a ceiling. You guys know, if you were in my support and resistance training, which if you're here at this video, most likely you already watched that video, that is exactly what we look for in order to pinpoint strong reaction zones within the market. So just getting back to this example, we saw that price was still respecting this level. So as we were waiting for price to break through this level, we actually got another flip, right? We got another stop and reverse on the parabolic SAR. So since we got another stop and reverse, again, we would have waited for the SARs to flip to the opposite side to go ahead and enter in on this sell. So we did get the parabolic SARs to flip. We did get a flat top candle. We did have price respecting this trend line, but still, even here at this point, I would not have entered this trade until I saw price break, literally break, okay? Break this area that it had so much trouble breaking before. So I would have gotten in anywhere from this candle from the second parabolic SAR or this candle from the third parabolic SAR. And if I'm being quite honest, you guys, this was still like, you would have probably still got some drawback from this because we had price break through. We were waiting to be safe for price to break through. And basically, if we would have got in, we would have had this pullback before price continued to push down. And again, you guys, the way to avoid this, the way to avoid drawdown in situations like this would literally be to wait for the retest, all right? Not being too eager to get in, not being too thirsty to get into this trade. If we would have just waited for price to break through, come back up, retest this area, which it did, and then waited for the stars to flip, I'm being honest, you guys, we still would have had drawdown just because of how the market was moving at this time. So sometimes, you guys, if I'm being honest, you just cannot avoid drawdown. The point of the market is to make you scared, all right? They want you to be afraid that your trades are not going to go the right way. They want you to be afraid that you're going to lose money, because when you operate out of this fear, that is when they are going to be able to capitalize the most off of you. I promise you guys, okay? Because operating in fear essentially is emotional trading, all right? And we all know emotional trading is not where it's at. The quickest way to lose money is coming to the charts and trying to trade when you're emotional, okay? So that is just, it's kind of inevitable, you guys, that some moves you're going to have to experience drawdown just because the brokers are attempting to fake you out and scare you out of your trade ideas. Because if you enter a trade and let's just say you have a $75 stop loss set on your trade, the market is literally going to swing up as close as possible to your stop loss just to freak you out. Because what happens is, if you are in drawdown and you think that you're going to lose more money, what do? You cut your losses and you just lose the money that you're currently down, right? But what happens when the market comes so close to your stop loss, you are just super convinced that it's going to hit your stop loss. So you say, you know what, I'm going to cut my losses right now. I'm just going to take this loss. And then as soon as you close out of the trade, the market turns around and smacks your take profit. You guys, that literally happens all the time. So this is why you have to trust your trades. You have to trust in your abilities. And this is why it's also important to never trade with any money that you need. You always want to trade with extra cash. You always want to trade with side hustle money. You never want to take the money that you need to pay your bills, the money that you need for tuition, the money that you need, for food. You never want to take that important money and invest it in the market, because it's literally just going to make you that much more attached to it and that much more emotional. So, okay, I know I kind of got just a little bit off track, but not really. But I just want to point out this final example for you guys, and then we're going to wrap up this training. So as you guys can see, we did have this drawback, and then we had the parabolic SAR stop and reverse again. So you guys, honestly, you could have gotten in on this move. Like, these were like 3 different opportunities that the parabolic SAR gave you to get in on this one move down. You had the entry here when price broke support. Then it came back up, retested this level as resistance. The SARs flipped. That could have been your second entry. Then you had price come back up and test this level again. It obviously could not break it. So we had the SARs flip again, and that would have been your third entry on this trade. So you guys, let's see. Let's say this was my first entry from here to here. That's 928 pips. All right. Then we got in again here before drawdown. From here to here was another 656 pips. And then on this final move, we got in here and took it down here. That was another 860 pips. You guys, all together, that would have totaled around 2,444 pips that you could have made literally just on this one move in the market. Literally, if you were that sure that this market was going to crash, this would have been a very, very smart thing to do, was get in at each point where the market came up and tested this area as resistance. So it looks like this indicator can also be used to maximize your profits. So yes, you guys, this is all I have on the parabolic SAR indicator. As you guys can see, this indicator is super easy to use. So I hope that you guys find a way to make it useful in your daily trading strategy. If you guys have any questions, you know exactly where to reach me. But until then, I'll see you in the next class. That concludes this lesson. If you have any questions or remarks, please join my discussion board and make them known. Feel free to follow me on social media and leave this emoji under a recent post for a follow back. Thanks again for tuning in to Money with Mari, and I'll see you on the next episode of Forex 101.